Hello, good morning. You're watching Market Cafe on ET now with me, Vinny Motiwala, along with me, Sneesha as well. Saying a very good morning to you as well. Saturday surely was a day that we saw an up move coming in for the markets. Not that much in terms of volumes for the Indian markets. Obviously, it was a
truncated day.
Yeah, more of an extra day that we had to work.
Absolutely.
But yes, that's how we are setting up in terms of the markets because it was open on Saturday. But saying what is the handover that we had in terms of obviously the US markets? A lot of updates in terms of commentary that came in as well.
Well, absolutely, Vinny. Lots of important voices have spoken over the course of the weekend. You had Fed's Williams speaking, you had Bolstick speaking. On Friday, you also had Mary Daly speaking. All of them common commentary coming in that rate cuts will be taking place this year, but towards a later date. So, well, that's the commentary that came in largely from the US market. But when we talk about moves on an intraday basis on Friday, or even when you look at weekly moves, US markets, Wall Street seemed to have done pretty well. But US stock futures were little changed last night after the tech-heavy Nasdaq posted a record high on Friday, breaking its own 2021 record as stocks attempt to continue their weeks-long rally. Now, stocks have been racing higher. We've been seeing a sea of green all across Wall Street, and this has been fueled by enthusiasm over artificial intelligence, with the Nasdaq soaring to an all-time high on Friday, making it the last of the major stock indices to reach a record close this year. Remember, the month of February also saw that Nvidia rally coming in for Nasdaq, so that's also another factor that aided this Nasdaq rally. And the S&P 500 and Nasdaq last week reached their 7th weekly gain in 8 weeks of this trading year, while the Dow ended the week in the red. Now, with markets having digested a better than expected earnings season, a hotter than expected consumer price index report, investors are now turning their attention back towards inflation. This week, investors will look for clues about the future direction of the interest rates from Fed Reserve Chair Jerome Powell's monetary policy updates to the House of Representatives on Wednesday and to the Senate on Thursday. These are two key important events that will shape a lot of Wall Street action that we'll be seeing over the course of the week. So watch out for both of these important days. Wednesday and Thursday is when Jerome Powell talks to the House of Representatives and the Senate. Now, when you look at data, then manufacturing and non-farm payrolls data for the month of February will also be released on Friday. So that's another place where the street will be focusing on. So that's largely the moves coming in from US. 0.2% uptick for Dow on Friday. S&P 500 up 0.8%. Nasdaq still continuing to beat all of those other two indices. 1.1% uptick coming in for Nasdaq on Friday itself. But let's shift focus to the European markets. Let's take a look at what's happening over there as well. And well, sea of green all across my screen when we talk about Europe too, because you have DAX that is up 0.3%, FTSE up 0.7%. Good move coming over there. CAC 40 rather flat, but nothing to worry about because still holding on to the green. And Stock 600, which is the pan-European index, that was also up 0.6%, so more than 0.5% uptick coming over there as well. So when globally, handover looking rather okay, not much to worry about. In fact, nothing much to worry about when it comes from US as well as Europe. But with that, tell us what's happening with oil as well.
So absolutely, we're keeping a close eye on the oil prices, Brent crude oil prices, as well as today natural gas prices. That's something that's seen a sharper uptick as well. So let's keep an eye out on that. Now, oil prices today are seeing an uptick because OPEC Plus has said that they will be actually staying with the oil, and Saudi and Russia-led OPEC Plus has decided to extend that voluntary output cuts of 2.2 million barrels per day, and this is into the second quarter that we're seeing. So WTI crude oil prices for the first time since November has actually gone above that $80 per barrel mark. This is the WTI Brent crude oil prices I'm talking about. The Brent crude oil prices, when you're looking at it this morning, $83-84 per barrel mark, it's what is trading around as of now as well. Now, obviously, when you look at it, the move is giving an extra fillip to the market amid the concerns over global growth and rising output outside the group. And Saudi Arabia said, the de facto leader of the group said that it would extend its cut to 1 million, I beg your pardon, 1 million barrels per day through the end of June as well, and leaving its output at around 9 million BPD. And meanwhile, Russia has also said that, which leads the OPEC allies, collectively known as OPEC Plus, will cut oil production by almost 500,000 barrels per day in the second quarter of 2024. Other than that, when you're looking at it in terms of natural gas prices, as of now, natural gas prices have seen an uptick of around 3% is what I'm looking at. So keep an eye out on the natural gas prices as well. Other than that, gold prices, where's gold standing at? That's going to be important as well. Gold Seeing a bit of a decline this morning. Early morning trade down almost 0.3%. 2090 around those levels per ounce mark is what gold is trading at. So let's keep an eye out on the global commodities that we're looking at. Brent crude oil obviously seeing a bit of an increase this morning as well, given that they have already extended those cuts that we saw coming in, and that is what we've spoken about in terms of OPEC as well. So let's not.
Well, absolutely. Yeah, so we'll see what happens with oil going ahead. But Winnie, well, good news coming for us because this Friday is a holiday again for the Indian markets.
Absolutely. So yes,
well, we're making up for that extra Saturday that we did work for. So yes, well, we're lucky. We're getting lucky over there. But well, staying with oil, Saudi and Russia-led OPEC Plus have decided to extend voluntary output cuts, like Winnie mentioned. But with that, let's also take a look at all the important cues that we need to be watching out for in this entire week's trading session. Like I mentioned, Friday is a holiday for us, a truncated week coming over there, but that doesn't mean that we don't have enough action coming in from the world. When we take a look at global cues then, and let's start by looking at what's happening in the US. On the 5th of March, you have the S&P Global Services PMI. 7th March, you have Fed's Beige Book and initial jobless claims. And 8th March, you have non-farm payrolls and unemployment data. Shifting focus to China, 5th March, you've got Caixin Services PMI. 7th March, you've got trade balance. And well, let's take a look at what's happening in India as well when it comes to corporate action. 5th March, you've got Government of India interest payment happening. So that's going to be an important one coming in as well. And Capri Global will be undergoing a stock split in the ratio 1:1 on 5th March. So watch out for that. 6th of March, South Indian Bank rights issue is going to open. Kaveri Seed Zydus Life buyback will be closing. So all of these stocks will be in focus as well. And it will be the last day to buy DCM Shriram and Marico to be eligible for their dividend. What else happens over the course of the week? We'll take you as and when we approach closer to those dates. But IPO corner also, you have 4th of March, which is today. Mukka Protein IPO is closing and RK Swami IPO is opening. Lots of action coming in from the primary markets as well. And well, lock-in period is closing for Dream Folk Services today. Sami Hotels on the 7th of March and Rishabh Instruments on the 8th of March. So well, lots of action coming in, and yeah, we'll take you through more of the action as and when we get closer to this week, Vinny.
Okay, surely keeping an eye out on those important events, Snehi, that we're watching out for. But also in terms of the neighboring country, let's talk about China, because it's starting our coverage this morning with the Asian markets. When you talk about it, the investors are closely eyeing the second session parliamentary meeting in China for signals of economic stimulus. This year, the event is likely to be dominated by China's lagging economy, deflation, massive debt and falling exports. One of the most important events to watch will be Premier Li Jing's delivery of the annual work report, which will review the government's accomplishments and set goals for 2024. So let's keep an eye out on that.
Well, yes, and staying with Asia, but moving from China to Japan, where the Nikkei has scaled yet another record high. The benchmark index has surpassed that 40,000 mark for the first time. Gains largely added by countries' semiconductor stocks and the likes of Tokyo Electron and Advantis. Now, these moves follow Wall Street's Friday rally, where Nvidia surpassed that $2 trillion mark in market capitalization.
And it's a rally is galore on the global markets after surpassing 5,100 levels. The S&P 500 is garnering bullish attention from the brokerages. Now, BofA, that's Bank of America, has gone ahead and upgraded this year-end target of S&P 500 to 5,400 from earlier 5,000. However, even as they hiked the target, the House still believes that a pullback is likely. But in this year, maybe sometime we could see a slight bit of a pullback. A pullback may be due over the next 4 months. So the first half of the year, maybe we could see that pullback. They say no significant drop is something that we could see, but slight bit of a pullback. So keeping an eye on that.
Well, with that, let's focus back home, and with the general elections just around the corner, PM Modi discusses the blueprint for a Viksit Bharat with his Council of Ministers. The meeting reportedly focused upon the implementation of a 100-day agenda post the formation of the new government in May. PM Modi and his Council of Ministers brainstormed a detailed action plan for the next 5 years.
Okay, that's all the global update that we have this morning. But on that note, we're going to slip into a very short break. Don't go anywhere. We'll be back with more Asia update, more domestic update after the break.
Hi there, welcome back, and thanks so much for staying tuned to Market Cafe. You're watching ET Now. Let's take a look at how the Asian markets have opened up this morning, and rather positive action coming in from Asian markets this morning when you take a look at it. But yes, well, we did talk about China and Japan and why they're going to be in focus today. But just to revisit, Japan's Nikkei crossed that 40,000 mark on Monday, gaining 0.6% and setting a new record high after S&P and Nasdaq also hit a fresh all-time high on Friday. As of now, Nikkei at 40,275, so comfortably above that 40,000 mark, and almost a 1% uptick coming in on Nikkei as we speak. And well, investors will also be watching for China's two sessions meeting today. Two sessions, of course, refer to the concurrent annual meetings of China's legislature, the National People's Congress, and the country's top political advisory body, the Chinese People's Political Consultative Conference. So on the back of that, you can see Hang Seng is down 0.2%, but well, not much to worry about. A 30-point cut coming in for Hang Seng. Shanghai also down 0.1%, a slight bit of a cut coming in over there. So as the meeting progresses, we'll see how these indices move today. Let's shift focus and talk about what Australia is doing, because ASX 200 started the week up 0.2%, but has lost all of those gains and is rather flat, but in the red nominally nonetheless. Remember, Australia also hit an all-time closing high of 7,745 on Friday. So, and it's right now at 7,741 whereabouts. So not much to worry about. Still just 3 points away from that all-time high level that it did hit on Friday. Lastly, let's talk about Kospi, because when Kospi opened, it was up almost 1.5%. Continues to be over there, a 1.3% uptick coming in for Kospi as well. Mixed action coming in from Asia, but well, not much to worry about, especially when it comes to Shanghai as well as Hang Seng. All the other indices in the green as we speak. When we talk about what we did on Saturday, Nifty closed at 22,378. It surpassed its all-time high level when it opened and closed at 22,378, implied at 22,505, indicating a rather positive and a strong start for us, Vinny, this morning. So well, let's see how that pans out for us.
Okay, yeah, but Nifty implied bit subdued, right? Right now we're looking at it, Nifty implied open is 0.01%, so barely any positive. Let's just watch out for that. Maybe it could move on the positive side, given that we are seeing the handovers that is not bad coming in from whether Asia or the global markets. 22,505 is the Nifty implied open, keeping an eye out on that one.
Hi there, welcome back. Thanks so much for staying tuned to Market Cafe. You're watching ET Now. Now let's talk about the elections that are just around the corner, and hoping to bag the first mover advantage. The BJP has released its first list of candidates ahead of the Lok Sabha elections. The list boasts of 195 names, with 34 ministers, 2 former chief ministers, 28 women and 47 young leaders. Prime Minister Narendra Modi is set to contest from Varanasi for the third time. Home Minister Amit Shah will also seek re-election from Gandhinagar, while Defence Minister Rajnath Singh will vie for Lucknow, and Smriti Irani will defend her Amethi seat. Now, Health Minister Mansukh Mandavia and the Union Aviation Minister Jyotiraditya Scindia and former MP CM Shivraj Singh Chauhan also feature on this list. Uttar Pradesh is pivotal with 51 candidates, and the party is making significant inroads in West Bengal and Delhi. In Delhi, the BJP has fielded Bansuri Swaraj, the daughter of the late Sushma Swaraj, and meanwhile Rashtriya Lok Dal chief Jayant Singh announced that the party is formally joining the BJP-led NDA to jointly contest the 2024 Lok Sabha elections.
Okay. Let's move on then, and the finance ministry has lauded the positive data points on the economic front. Talking to ET Now's MOS Finance Bhagwat Karat said that the data shows there is growth across various sectors, and he also spoke on the centre's plan of involving fintech in pension-related platforms. Let's go across and listen in.
See, fintech is a very important thing, and we are trying to involve the fintech in all the departments, particularly in the pension scheme, in the funding, non-funding, everything we are thinking. Though we have taken important session for the fintech also. The involvement of the fintech and by the new technique is important, that we are trying.
Just had the GST collection numbers yesterday. We saw the collection numbers rising to 12.5%. So could you shed some light on the same?
Overall, if we see, the GST collection is increasing, and it is due to the efforts of the government and efforts of the people. GST collection is increasing, and it is a nice news to everyone that our economy is increasing, and it is very good.
Well, all right, let's get a move on then. And after the government's intervention, applications like Anupam Mittal's Shadi.com and Sanjeev Bikhchandani backed 99 acres are back on the Google Play Store. This has come after a lot of backlash from tech companies as well as the government when tech giant Google decided to delist some Indian applications over payment issues. My colleague Sumit Chaturvedi caught up with the Minister of State Rajiv Chandrasekhar about the same, and here's what we got from him. Listen in.
It is certainly clear, and I have said this many times, that Google's Play Store dominance on app ecosystem in India, which is about 93% of the market share that they have, is certainly an issue of concern. Is a matter of concern because they are a company that is vertically integrated, and that type of dominance, that type of market power, if it is not regulated carefully or not used carefully, can be misused, can disrupt the choice and openness of the internet that is central to our policy making. Free and fair competition, preventing abuse of market power, preventing market power from abusing our small startups and extorting from our small startups or indeed content creators is something that is something that is very important to us, and we will certainly as a government of India not allow that. Today we have issued a continuing advisory to deal with the generative AI platforms and broadly the AI platforms and the problems that are being caused by their introduction into the public internet without sufficient testing, without sufficient awareness, and without sufficient disclosures. If you are deploying an under-testing platform in India, you have to inform the government, you have to provide labeling on your platform and disclosure on the platform that it is under testing, it is under training. And most importantly, you have to inform the user explicitly through a consent mechanism that the platform may output unreliable and unlawful content as a consequence of its under testing nature. We make it very clear in the advisory that there are very strict legal and criminal liabilities that will arise if they continue to introduce from their labs onto the public internet in India without any guardrails or disclosures or disclaimers and put consumers at risk and put themselves at risk by outputting unlawful content and violating the law.
And let's shift focus to the Zee Sony saga. And in the aftermath of the failed Sony merger, Zee's MD and CEO Puneet Goenka emphasizes a forward-looking approach, prioritizing business rebuilding. He asserts that unprofitable assets will be divested. Despite share price challenges and SEBI's fund diversion allegations, Goenka remains at the helm, and in an interview with Economic Times says that there are no calls for management change from the Zee board. Adds that Zee is aiming for an 18 to 20% EBITDA margin by FY26, and despite NCLT's proceedings, Goenka eyes value for shareholders through quality focus, emphasizing on return on investments. On the RIL Disney deal, he says that the competition is always welcome and they are prepared to remain competitive.
Well, that's the update coming in on the Zee-Sony merger fallout and the aftermath of that. But with that, viewers, we'll slip into a very short break on this edition of Market Cafe. We'll be right back with more stock-specific news and updates, so you stay tuned.
Welcome back. You're watching Market Cafe on ET Now. Let's go across to Ansh, who's standing by to tell us the FNO snapshot this morning. What is it looking like? Ansh, take it away.
Right, so let's have some flashbacks. Saturday's volume obviously had a very low. It was around 10% of average trading volume, and with that low volume, Nifty touched 22,400 for first time, which raises question on its sustainability. But let's have a look over the chart. So index seems to have formed a broadening range pattern, which usually indicates more fluctuations, more volatility in the market. So keep your stop losses tight. Whereas on option front, we are seeing a call buying and put writing happening at 22,400 mark, which indicates traders are actually hoping Nifty to go back about 22,400. Moving on to Nifty Bank. Here you can see, if you can get the chart on the screen. So the index seems to have taken a resistance at February month high, which is around 47,400 to 47,500, which may continue to have today's resistance as well unless we see a gap up opening. Whereas on option front, we are seeing put writing at 47,300 followed by 47,000 psychological mark, indicating good support around this level. If you talk about FIS, then in previous session they added around 1,200 contracts on upside. They did some short covering as well. So net to net we are seeing addition of around 1,400 contract on upside, due to which the FI total long position has inched a bit higher to 35.3%, indicating their positive stance in the market.
All right, Ansh, thanks so much for taking us through what the FNO snapshot looks like for today. But with that, also take us through all the important stocks that could be potential buzzers in today's trading session on the back of news flows.
Right, so Patel Engineering will be the first stock in focus for today's trading session, as they have received letter of acceptance for 5,225 crore with a joint venture partner for RCC protection wall project. The company share in the contract is around 267 crore. Apart from this, Brigade Enterprises will also be in focus, as company has launched a new residential project in Bangalore having a revenue potential of around 380 crore. Moving on to MOIL, so the company has achieved best ever February production, having production at around 1.5 lakh ton manganese, which is up by around 15% on year-on-year basis. Moving on to KPI Green, the stock will also be in focus, as they have signed power purchase agreement for 200 MW AC grid connected solar photovoltaic power project. Finolex Industry will also be in focus, as they have also signed share purchase agreement for procurement of 8.3 megawatt solar power project with Hinduja Renewable One Private Limited, a special purpose vehicle formed by Hinduja Renewable Energy. SDVN will also be in focus lastly, as they have got 200 megawatt Gujarat solar park project for 1,100 crore. So keep an eye on the stocks.
Okay, surely keeping an eye out on all the stocks on the back of news flows, but which are the stocks that the brokerage radar and brokerage houses are keeping this morning on their radar? Let's go across to Gaurav, who's here with that list. Gaurav?
Yeah, so first let's talk about Fedbank Financial, where Equirus initiated with long rating and a target price of 160 rupees per share. So they believe that the bank is actually, the company is actually backed by a bank. This is into MSME lending, and this follows Phygital business model, which is actually a strong business model which can actually yield a result of AUM growth of almost around 29% on a CAGR basis for the next 3 years. And that is why we are seeing some kind of bullish view coming up from Equirus for Fedbank Financials. Let's also talk about Gulf Oil, because ICICI Securities initiated with buy rating and a target price of 1,250 rupees per share. So they believe that any, internal and external factors are basically well in place to fuel the growth from here on. Company's earnings growth is strong, and on the basis of this, we may see the earnings to grow at CAGR of 11.4% over the next 3 years. And if we talk about the company's strategy, so basically ICICI Securities is positive on the company's strategy on aggressive branding, distribution rollout, and company is also diversifying its portfolio into batteries and EV fluids. And this is going to help the profitability from here on, according to ICICI Securities. Let's also talk about steel sector, because CLSA has changed some of the target price for the steel sector names. So for example, for JSW Steel, they have downgraded the rating to sell rating and cut the target price to 730 rupees per share. For Tata Steel, they have downgraded to sell rating and also cut the target price to 135 rupees per share. And lastly, for JSPL, they have maintained underperform rating but increased the target price to 820 rupees per share. So what they believe is that profit pool in India's steel companies is going to move more towards miners from the converters, because the steel capacity addition is picking up from here on. And if you look at the valuation for the steel companies, they are actually at a higher end, and consensus is not actually factoring in this valuation according to CLSA, and that is why we are seeing some kind of changes in the target price as well as in the rating for some of the key steel names from CLSA. So let's keep an eye on all these companies from here on.
Well, Gaurav, yes, that's right. We'll be watching out for all of these stocks and the steel sector today in today's trading session. So thanks so much for taking us through that. But Investec held a conference over the weekend, and here are some of the important takeaways that came out of the conference. They spoke about a whole host of stocks, but we'll take you through 5 of them. KC International is the first one in focus now. It's a rather negative note coming in from Investec for this, because they say that the company won't be able to achieve the earlier guidance of 9% EBITDA margin in FY24 due to a slowdown in the railway business and geopolitical issues. But they're saying they've guided for a 150 to 200 bips margin expansion in FY25 and closer to 10% in FY26. They also expect to cater to 17 to 18% of the market share of the total opportunities in the T&D space globally. Shifting focus from that is Suntec Realty. Then they're saying that the Mumbai metropolitan region market continues to be the key area of focus. BKC, which is Bandra Kurla Complex, inventory offtake to steadily improve on account of locational advantages and the price point differential that area boasts. Well positioned to double its gross development value from 30,000 crore currently to 60,000 crore over the next 3 years. So rather positive note coming in from Investec for Suntec Realty. They also spoke about IDFC First Bank. They say that the key message for this bank is that the bank's liabilities franchise is underappreciated by the street despite it delivering a 40% plus retail deposit CAGR while reducing its cost of fund spread versus large peer banks. They've reiterated the medium-term guidance of 20% CAGR in both assets and liabilities, and they say that FY27 is going to be an important year for IDFC First Bank as the entire legacy borrowings will be repaid, offering clean profitability. Greenply then confident of achieving double-digit margins in FY26 from the current roughly 8.2%. BIS norms could, however, curb cheap imports, which is around 20% of the total consumption in India, and furniture hardware joint venture with Summit to be commissioned by Q1 of FY25. Indicating a revenue potential of 250 crores in FY27. Lastly, they also spoke about Zensar Tech, and they say that the demand environment continues to be weak, FY25 to be worse or similar to FY24. So that's a slightly negative note coming in for that stock. EBITDA margins to settle around 14 to 16% versus the 17% that was initially guided upon, owing to impact of ramp-up in large deals and reinvestments. Weakness in the high-tech USA biz likely to be bottoming out when we approach Q4. Revenue run rate in high-tech USA could remain stable throughout FY25, and order book remains strong with 75% of the clients signing the SOWs. So, well, that's a roundup of all the important stocks that Investec highlighted during their conference.
Surely interesting highlights that have come in from Investec's conference that happened last week. But let's move on, because this week is going to be very, very exciting in terms of IPOs. We have a whole host of IPOs that will be coming in. And obviously, March will be seeing a bigger buzz in the primary markets. 3 companies that we're going to be starting with for the IPO this week: Gopal Snacks, RK Swami, as well as JG Chemicals. What are they going to be doing? What is their business? How much will they be collecting? Sharad is here with all those details. Good morning, Sharad.
Well, in focus, we are having 3 main board IPOs which are coming. Roughly 1,325 crores will be raised. And at first is RK Swami, which the IPO is opening today itself. The IPO price band is roughly between 270 to 288 rupees per share. IPO size is more than 400 crores. And the company did raise almost 187 crore rupees from anchor investors. And marquee names include Nippon Mutual Fund as well as ABSL Life Insurance. Now, the company itself, we look at, is a market services company, especially on the digital marketing front. So that will be very interesting to see, especially with Affle being its competitor. And also, if you look at the second company which would be in focus, that would be JG Chemicals. That's a roughly 251 crores IPO, and the IPO price band ranges between 210 to 221 rupees per share. And the IPO is opening tomorrow from the March 5th. Now, the company itself is a zinc oxide manufacturer, which itself is a chemical company, and the applications include in the pharma as well as the agrochemical space. But that is the second company which would be coming for the IPO. The third company and in focus is Gopal Snacks. It's a larger size IPO of roughly 650 crore rupees, and the IPO opens on March 6th and closes on March 11th, and the IPO price band is between 381 to 401 rupees per share. The company itself is an FMCG company that deals in ethnic as well as Western snacks. So it'll be very interesting to see 3 important IPOs coming up, and all coming from different segments this week.
Well, all right, Sharad, thanks for taking us through that. Lots of action in the primary markets over the course of the week. But viewers, with that, we're completely timed out on this edition of Market Cafe. While we bid you goodbye, you listen into what Ajay Srivastav, the CEO at Dimensions Corporate Services, have to talk about the PSU sector, the banking sector, as well as the new age tech space. Listen in.
I think some sectors you have no choice but to go into PSUs, like defense sector. We don't have any big defense company in this country, at least this point of time. Some may emerge over time, a Bharat Forge may come in or a smaller setup may go. But if you want to buy defense, you have no choice but to buy the PSU companies. If you want to buy oil marketing companies, which have a huge reach in this country, you have no choice but to buy PSUs. If you look at power stocks at this point of time, the man who sits on the highest power capacity is a PSU stock. If you look at transmission companies, you don't have an option but to buy into a PSU transmission company because there is none which exists in the private sector. There's a REIT which exists in the private sector of transmission company integrate, but company don't exist. So, the debate whether we can buy or not is a choice that if you want to be in the sectors, transmission, defense, big power at the end of the day, you have, and say oil retailing, these four sectors, you have no choice. Yes, you have a choice to buy a PSU bank or don't buy a PSU bank. But if you look at these 4-5 sectors, you have no choice. So I think my guess is that these sectors will have just seen the first run up after almost 2 decades. We have seen PSUs not performing for 2 decades or maybe more. So I think this is the first leg, and people have got really said, it's the new high. But I think it will go higher. I think PSUs will get more traction, certainly in the 5 sectors we have spoken about just now, because simply there is none which exist and there is no competition. And anybody from overseas wants to come into India in these 5 sectors has to go to the PSUs. So my guess is that these 5-6 sectors, including say power finance, that's a unique niche in this country, which again with the PSUs, you can't go anywhere else, PSUs. So you can pick and choose. You want to ignore the sectors? Sure. You want to be in the sectors? PSU is your game. And I think they will give a much better return because for one reason, the dividend policy is not specified. So with the dividend yield, these become very attractive buys. And, debt is not their concern. They are government guaranteed, so they can borrow the best rates. Professional management, one can say yes to some extent, but OMCs would say it's not professionally managed because the rates are governed by the government at this point of time. Having said so, I think overall it looks positive. And with the new government coming in, I guess is that there will be more divestments and more accountability. Boards will get professionalized. So it's in a good wicket to be at least in the 5 sectors.
A good decade to be in the PSUs in the 5 sectors that you spoke about as well: defense, power finance, OMCs, all of that coming in, Ajay. But I also want your thoughts on specifically when you compare PSU banks with private banks, what are your thoughts that, and over there in terms of private banks, would you be looking at any of these big banks coming in, specifically something like an HDFC, Axis? Seems like we've not seen much of a performance there as well from these large banks.
See, we don't have much banks in our portfolio, neither in advisory at this point of time, for the simple reason that these are behemoths who have lost to the competition. They did not invest enough. And once the RBI removed the umbrella of no new licenses and the fintechs came in and NBFCs got a little bit leg, these banks were caught wanting. Of course, leave aside HDFC Bank, which is a disaster to start with. The merger was a disaster. So leave that aside. It'll take its time to come up. It's a good institution, but it'll take its own time. But by and large, I think this is one sector which has lagged behind because the RBI gave them such a comfort of no competition that they never thought of the consumer at the end of the day. And that is what fintechs came and did it. Of course, fintechs under a cosh as well. But the point remains that the core constituency of the bank was keep your money cheap and lend at leisure, including government securities. So you kept